What's up, guys? Eric here, Mr. Fired Up Wealth. Early morning video here. They just released earnings, Palantir. Some really impressive numbers. I want to go through the earnings highlights with you. So listen to this, guys. Q2 revenue grew 49%, solid numbers, year over year to $376 million. But this is key because this next part here, this is something that we've talked about on the channel many times, where Palantir really has to dig into the commercial side for that growth. And their US commercial revenue growth rate accelerated to 90% in the quarter. Their Q2 total contract value booked grew 175% year over year to $925 million. So they have backlog. They've got money coming down the pipe. These guys are starting to really accelerate their growth. Total contract value booked, you can see 337 million all the way to 925 million, 175% growth. Now, trust me, guys, I know there's some of you that are watching this and you're frustrated because you bought this stock a lot higher. It did kind of get parabolic for a while. We bought this in Discord at $9 when it became a direct listing. And some people, unfortunately, did kind of chase it. I think long term, it'll be okay, but I totally understand. The good news for you, if you are sitting on this wondering what to do, it's trending in the right direction. We added 20 net new customers in Q2 alone. Now, the important part about these customers, we'll talk more about it later in the video. At the end of this video, I'm also going to give you my opinions on the stock moving forward, so definitely watch the whole video, stay tuned. So they added 20 net new customers in Q2 alone, and total commercial customers grew 32% quarter over quarter. But the key to this is that the revenue is accelerating in these commercial clients. They're large accounts. Their Q2 commercial customer count has increased 61% since December 31st, 2020. So basically in 2021, they've grew their commercial customer count by 61%. And this is where they can make a lot of their money. Average revenue from our top 20 customers grew to $39 million in Q2 2021 from $36 million in Q1 2021. You can see the average revenue per top 20 customer. It's accelerating in the right direction. It's trending upwards, exactly what we want to see as investors. So listen to this, guys. This quarter, 62 deals of at least $1 million. That's really big, but it gets better. 30 of which were at least $5 million and 21 of which were at least $10 million. So listen to these numbers, guys. 49% revenue growth, okay? Adjusted free cash flow of $201 million. Now that's a margin of 28%, which is an improvement, but the reason it doesn't get even a higher multiple compared to some other SaaS vendors is that margin is actually pretty low for the space if you follow this kind of space. So keep that in mind, guys. Adjusted operating income of $233 million. That represents a 33% margin. Visibility into the future. Growth is strong as total deal value increased 63% to $3.4 billion. So they have a pipeline that's growing. More deals coming in the future. Now, if you're new to the channel, please subscribe because I've covered this many times. In fact, I brought Palantir to YouTube before anybody else. This is all about big data and AI. And it's one of those stocks where you think about it as big data, but it really crosses over into that cybersecurity realm. And I won't be surprised if, say, cybersecurity ETFs start adding Palantir at some point because of the cybersecurity element to their business. So on that topic with cybersecurity, so this kind of ties into that a little bit, right? So in 2 days, one of the largest banks in Europe with more than 10,000 branches deployed an end-to-end anti-money laundering and compliance process in Foundry. Software-defined data integration, driving the marginal cost of application development to zero. And you can see year 1, year 2, year 3. The nice thing about this software is it's very sticky and it allows customers to grow their footprint and spend more money. Now, this slide once again ties into that cybersecurity element. Foundry is the operating system of choice for utilities, including PG&E and a few others listed on here, Southern California Edison, but creating a connected utility, and you need to keep those secure. We've had several breaches over the last few years. Recently, there was a breach where gasoline shortages happened. People go crazy. This is a huge threat to our national security. If you think about someone taking down the electric grid, how long could you last if you didn't have electricity for a couple of days? I mean, right? Your freezers, refrigerators. If you don't have electricity, you don't have power, big problems can happen. You'd have riots in the street and so on. So this is why I say that it kind of ties into cybersecurity. It's not technically cybersecurity, but it definitely dabbles in that space. If you didn't watch my last video on Palantir, it was just a couple weeks ago. It talked about how they're investing in startups and SPACs. Here's a few of those companies. It's really huge because it allows them to basically get inside the company. It allows them to land and expand, they call it. They call it land and expand. So essentially, you're growing with these small businesses, and as their businesses grow, they increase the usage of Palantir's tools within their business. Now, this is something I talk a lot about when you think of SaaS. I always say that you have to have a sales-driven organization. In this quarter, they made 60 additional sales hires. That is huge. If you want growth, especially if you're a software company, you need a strong sales team. So seeing these 60 hires is very big. Their customer count, guys, increasing. You can see up 13% to 169, 925 million of total contract value of net new customers. So their bread and butter is going to be defense contractors, US Army, Air Force, Coast Guard. They signed new deals with all these, including a $100 million deal with SOCOM, driving applied AI decision-making for real-world scenarios. They signed new deals with HHS and CDC, including doubling their contract with Tiberius to help the US manage vaccine production, distribution, and administration. I mean, these guys are even working with the FAA. So basically, they're conducting these critical tasks, such as the ongoing monitoring of the 737 MAX fleet. So getting that return to service. I mean, they're involved in so many different things, both government and commercially. This is something that's big for them. They're continuing to expand their partnership platform and their strategies. This is going to be big for them, and it's something they really need to focus more on. But they are developing their channel partnership strategy. They've signed a deal with this data robot focused on helping customers with demand forecasting. So I don't know much about data robot, but it definitely sounds interesting. Wanted to bring it to you. Okay, this part's huge. If you don't know my background, I worked in SaaS, software as a service. I also did, platform as a service, infrastructure as a service. I sold software for Oracle before cloud was all on-prem. They're continuing to work with these SIs, so strategic implementers, SIs. So like Accenture, for example. And this could be huge because you want that partnership. You want to make sure the customer has a good experience with the implementation, and having quality partners really will do that. It'll help them expand their footprint within these customers. When they're satisfied, it gives them recommendations, referrals, things like that. It also can bring new opportunities and new business to Palantir. So revenue grew 49% year over year to 376 million. Now they're really starting to improve their adjusted free cash flow, which I think is very important. They surpassed $200 million in this quarter, and that's an improvement of $433 million year over year. Adjusted free cash flow guidance to 300 plus million, up 150 million previously. So they're improving their margins, but their margins are not great. The good news about this, though, is they're going to be able to expand that margin more as they get more involved with commercial. When you think about working with the government, of course, you've got to be lean on your pricing. With commercial, they can actually charge more and actually make more margin on those commercial clients. That's why commercial customers are going to be huge for Palantir's future growth. Total contract value booked, you can see, guys, 337 million, 175% increase to 925 million, and their billings up 40% to 379 million. Commercial customer count, as we said, up 32% quarter over quarter. More importantly, the amount of money they're making from each of these customers is larger. We continue to see strength across our US business as revenue grew 60% year over year in Q2. Government revenue still increasing, which is great to see because it still is their bread and butter. That grew 66% year over year in this quarter, and they signed those new deals we mentioned with Army, Air Force, Coast Guard, HHS, and CDC. Very huge customers. All right, this is money right here, guys. So commercial revenue grew 28% year over year in Q1 2021. But listen to this. Q2 US commercial revenue growth accelerated to 90% year over year. If they can keep that pace, watch out. So they ended up with the quarter with $3.4 billion basically in remaining deal value. It's like pipeline. So deals they expect to close. That's up 63% year over year. That's a big number. Now they have 62 deals worth $1 million or more. They have 30 deals worth $5 million or more and 21 deals worth $10 million or more. So we talked a little about margins. Their adjusted gross margin improved to 82%. So that's good. You see 80% to 82%, a 2% increase here in adjusted gross margin. The contribution margin is up 3% to 58%. 117 million, 31%. So they're ahead of their prior guidance by 23% when you think of adjusted operating income. Last slide, and stay tuned, and then I'm going to share my thoughts on this company and the stock moving forward. Q3 outlook, revenue of $385 million, adjusted operating margin of 22%. That seems a little bit low to me. I have to look into that a little bit more. Full year 2021 outlook, adjusted free cash flow of $300 million plus. That's good. Long-term outlook, revenue growth of 30% for this year and the next 4 years. Now that's pretty huge. So you're talking about over the next 4 years, 30%, and you're compounding that. That's pretty solid growth. It's not, insane hyper growth, but it's very solid growth. Okay, so real talk. What are my thoughts about Palantir, about the company, about the stock moving forward? This was a buy in Discord at $9, direct listing in 2020. Brought this one to YouTube. Definitely subscribe to the channel. This is the type of thing that we do. We bring these to YouTube before anybody else. Just recently, Confluent was another one, and we're constantly trying to improve, trying to get better. Drop me a like. Drop me a comment. I appreciate the support. So when you think of Palantir, I like the company. I like the stock. I'm bullish on it long term. What happened was the stock just ran too far, too hot, too fast. And that happens sometimes. I mean, the stock, guys, it went from $9 and it ran pretty much straight up to $35.18. That was on January 29th, 2021. Then it pulled back significantly. Here's the good news. If you own the stock, it's actually up right now, 9.49% pre-market, trading at $24.47. You know, I said this was definitely a buy at $9. I thought it was a buy in that, low $20 range, especially under 20. It didn't dip to there, but it got down to like $21. If you didn't own the stock, it would have been a great opportunity to add or to dollar cost up, average up. But, the thing about this company, this stock, there's a lot of excitement about it. It reminds me of kind of like a Tesla. You got like an Elon Musk CEO. You got Alex Karp, who's the CEO of Palantir. They're both unique guys. They're guys that you really want to root for, right? And these are kind of companies that are exciting to talk about. They're kind of mysterious. And so, it had a lot of hype behind it. It does still have a cult following. If you're watching this, you're probably, a diehard Palantir fan. I am a bull on Palantir. I have been from day one, but they do have a ton of shares outstanding. The valuation is arguably a little bit expensive, but if you're a young investor and you're investing for future growth, I don't think there's anything wrong with owning Palantir. I think you just have to temper your expectations. When you think of 30% growth, that's strong growth, but it's not hyper growth. It's not, snowflake growth where you're getting 110% year over year, or even like a CrowdStrike or a Cloudflare or some of these newer companies. You think of an Upstart and so on. I mean, these guys have more of hyper growth. They're a much younger company. Palantir's been around for a long time, 15 plus years. So it's not like it's a new company. They decided to go public. They were going to go public back in 2018, never did. I was disappointed. 2019, every year. And then, in 2020, they said they were going to do a direct listing. And I'm like, I'll believe it when I see it, They finally did. And I had to buy the company. But, I've been following this company, this stock for a long time, probably before most people have even heard of the company. I definitely like it. Just understand what you're buying. You're not buying a hyper growth stock. When you look at the valuation right now, $25 and higher, it's expensive. Will it go higher? Probably, because people want to own the stock. And it's just like Tesla. Tesla still trades at a crazy valuation to some, but after Tesla's last quarter, they literally cut their PE in half, So these companies, they can grow into their valuation. The one thing I'll note though is Palantir doesn't have that hyper growth that we saw with Tesla over the last couple of years. So keep that in mind. With that said, I think they can accelerate growth. I think 30% is conservative. I think as they add more commercial business, that number is going to increase. So I'm long Palantir. Any dips, that I see, I'm going to add. I think this last earnings actually solidifies a little bit higher valuation than that under $20 mark that I've been saying. So yeah, $25 is probably still a fair price. Now, don't go buy it at $25 and then it goes down 10% and blame me. I'm a long-term investor. I dollar cost average. I'm definitely not saying that this is something that you just buy and it's going to go up every day. It's not necessarily a rocket ship or anything like that. So I'm bullish Palantir. I'm holding it long. I'll probably have it for 5 or 10 years. I appreciate your time and attention. I hope you have a great rest of your day. Take care.